Now, for more on everything that's been going on in the Obama administration today and how it might affect the markets and the economy, we're joined now by Fiscal Times columnist Liz Peek. Liz was one of the first women partners on Wall Street, worked for nearly 2 decades at Citigroup. Also joining us, we have Joe McAlinden, chairman and chief executive of Catalpa Capital. He's been making bullish calls for a V-shaped recovery for quite a while now. We just call him Mr. V for short. Great to have you with us both. Liz Peek, listening to the changes that have taken place in Washington, combine that with some of the new economic news that we're getting, particularly on jobs, as well as the retail sales numbers. What does that tell you about the future of the economy, let's say looking a quarter into the future?
I'm pretty optimistic, too, about the economy. I think that we have a little bit of a better tone coming out of Washington. Obviously, the extension of the Bush-era tax rates to everybody has already proved to be an actual positive. I was hearing just before coming on that the retail sales numbers were disappointing a little bit for stores like Target and Gap, but the wealthier Americans, who I think got a big confidence surge by seeing their tax rates kept at low levels, went out and spent an enormous amount, up 45% in the last quarter.
The shares of Nordstrom's, for example, responding to that.
Nordstrom, all the high-end vendors, and that's, you can think that that's wrong, but it's very good for the economy. I think we're on a much better track. I think the appointments do give people confidence. I think it's amazing that this president, who has placed such importance on empathy and sort of qualities like that, never really understood that the business community, all those decisions on investment and hiring are made by individuals, and they need to feel positive also about their outlook. So I think bringing in some of these new appointments are going to pay dirt, and I think pay off. I mean, I think that's a good idea.
Joe McAlinden, you still got the V shape going?
I do, and I agree with Liz. This is all positive news. All of these appointments. And I think actually the most positive is that the guy that's still in his chair is actually the most powerful economic
Let me guess. This is Ben Bernanke, the head of the Federal Reserve.
In the world, and he's got the pedal to the metal. And this fuss over the retail sales numbers today is only going to keep his foot on the floor and off the brake. And that, for me, is bullish. I've gone from Mr. V to Mr. Print Baby Print, and I think it's going the extremely expansive monetary policies are going to have very negative consequences 2-3 years down the road. But right now, it's party time. The market's going higher.
You say 2-3 years down the road. Does that include the election or after the election?
I'm not sure. Milton Friedman always said the leads and lags are long and variable and unpredictable. But it could kick in 2012, the problems.
Now we're speaking about how the latest Washington moves will affect markets and the economy. My guests are Joe McAlinden of Catalpa Capital, also with us Liz Peek of the Fiscal Times. Liz Peek, we were just talking during the break that this new Chief of Staff, William Daley, has extensive ties not only to the business community as a member of the sort of cadre of people from J.P. Morgan Chase. He had an Amalgamated Bank in Chicago, also sits on the board of Boeing, Abbott Labs. Now you add Gene Sperling to the mix, as mentioned by Gary Locke, the Commerce Secretary, and confirming that he's going to take over Larry Summers' job. All right, I know there's a question in here, which is,
right.
Are we just getting more of the same? Because it seems as though Gene Sperling was part of Larry Summers' group in the Clinton administration that repealed Glass-Steagall.
Gene Sperling is sort of an apparatchik. I never know quite what that word means, but I mean, it seems to me like he's been in sort of those similar roles forever. I think the Daley move is a little more interesting. Howard Dean came out with laudatory comments about him, and yet also the business community. So really, who is this guy?
So it's a win-win for everybody.
I don't know. I mean, it can't possibly be true. I think both of these appointments really speak to the fact that the president wants to have a more friendly relationship with business. He has been criticized roundly for not doing so. I mean, let me just say, it's high time that he focused on job creation and working with the private sector to create jobs. It's 2 years now that that should have been the high priority. Now, finally, it is. But I think the underlying message from both of these fellows also is that they know their way around. They can do deals. They're negotiators. I think Sperling in particular is known to be a pretty good negotiator. And there's going to be a lot of negotiation. This business of not raising the debt ceiling, obviously it has to be raised. We're spending $100 billion a month more than we're taking in the government. So I think we have, 4 months before that thing has to actually be changed. So all the negotiations behind that and some of the other moves that have to be made are probably going to be pretty tense. And they have to have some grown-ups on the stage to do it.
Joe McAlinden, how do we make money doing this? This seems to be, a bet on trying to get reelected in 2012. We know that always happens.
Yep.
So how do you make money as an investor?
Well, just to segue from Liz's comments, I think that part of the problem in the last couple of years has been anti-business, anti-profit motive rhetoric coming from various administration officials, including the president. This shift to the center is very positive in that context, in my view. So you have really easy monetary policy. You have a pro-business House, certainly. And now you have an administration, maybe they're not doing a Clinton, but they're moving more to the center.
Well, they certainly have, the second-term Commerce Secretary, and they've got Gene Sperling, so it certainly seems like a Clinton administration.
Exactly.
Clinton 3, yeah. So, so I think that's very positive. And to answer your question specifically, if you think about it, what was the most vilified sector out of the top 10 S&P sectors?
I got to think financials and banking.
Absolutely. And so I would put chips there. I think that if we're doing an interview on New Year's Eve at the end of 2011, and the tornado of the bar charts of the top performing sectors, at the top will be financials.
Do you think XLF, the ETF, the exchange-traded fund that bets on financial stocks, banks particularly, they're going to do well?
I do. I think it'll be the top performer.
Top performer
of the 10 sectors.
Of the 10 sectors, yeah. Indeed.
Yeah.
Liz Peek, what do you make of that? The financials, because as Joe was saying,
I think they've already had a pretty big rebound. And the only thing I would say, I think we're all feeling much better about this. We're feeling good about these appointments, et cetera. But don't forget that a layer down, the heads of all the regulatory agencies are on fire. They want to, up their staffs. They want to investigate every sector. Certainly the financial regulatory overhaul is just in its infancy in terms of all the rulemaking and stuff.
The House who are even talking about pulling back some of the Dodd-Frank legislation, saying that they're not going to let it happen and they're not going to actually fund it. So even if it's on the books, there are not going to be any people in those positions to enforce it.
But it's such a monster thing. I mean, I would just caution that the rule makers, the people actually in the agencies overseeing all these bills that have already been passed, and yes, they may starve some implementation of some of them, but I think that's hard to do, sort of broadly. A lot of those agencies already exist. Elizabeth Warren's agency, has been put into place, though it's, at this point not particularly active. But I would just say that we have to be a little bit conservative here on how.
Don't get carried away.
Yeah, don't get carried away, because the impulse of this administration is still that not enough regulation was taking place, and that's why we got into trouble.
Joe McAlinden, what about the U.S. dollar? Is this going to be good for the dollar eventually? Interest rates going to go up?
I wouldn't be short the dollar here. I think that foreign exchange markets, when you look at the forwards and what's happening to some of these currencies that had been strong earlier, are beginning to anticipate short-term interest rates moving higher over the next 2 years, relative to what's happening with the commodity currencies and the euro, certainly. So I would not be short the dollar.
Don't bet against the Fed.
And long euro, yeah.
All right. I want to thank you very much, Joe McAlinden, Catalpa Capital, Liz Peek from Fiscal Times, sharing your insights about changes going on in Wall Street.